Mirae Asset Nifty Large Cap Mid Cap 250 Index Fund. Will investing in this fund, which offers exposure to both large cap stability and mid cap growth, help you create wealth in the long run? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. But before analyzing this fund, let us first understand what is Mirae Asset Nifty Large Mid Cap 250 Index Fund is about. So as an NFO, it opens on 10th October 2024 and closes on 18th October 2024. And some of the key features of this fund is that it is an open-ended fund type which belongs to the category of equity in large and mid cap. And it has Nifty Large Mid Cap 250 TRI as its benchmark index, and there is no entry load as well as exit load in this fund. So the minimum investment amount you need to start investing in this fund is just 5,000 rupees. And the fund managers for this fund are Ms. Ekta Gala and Mr. Vishal Singh. And according to the riskometer, you can see the risk involved in this fund is very high. Now, if you take a look at the primary investment objective of the fund, that is to provide returns to the investors which before expenses closely correspond to the total returns of the securities as represented by the underlying index, which can be subjected to tracking error as this is an index fund. So these are some of the key features and details about this fund. Now, as we have a basic understanding about this fund, let us also understand the index it is representing, which is the Nifty Large Mid Cap 250 Index. So the Nifty Large Mid Cap 250 Index reflects the performance of a portfolio of 100 large cap and 150 mid cap companies listed on the NSE, which is represented through the Nifty 100 and Nifty Mid Cap 150 index respectively. So the aggregate weight of large cap stocks and mid cap stocks is about 50% each and are reset on a quarterly basis. So this index can be used for a variety of purposes such as benchmarking, creation of index funds, ETFs and other structured products. Now let's take a look at the sectors this index represents. So the sectors it represents are financial services, IT, capital goods, automobile and auto components, healthcare, oil, gas and consumable fuels, FMCG, chemicals, consumer services, metals and mining, consumer durables, telecommunication, power, construction, realty, services, construction materials, textiles, diversified media, entertainment and publication sectors. So the highest weightage of 25.15% is given to the financial services sector, while the lowest weightage of 0.10% weightage is given to the media, entertainment and publication sector. Now, if you take a look at the top 10 holdings, the top 10 companies of this index, they are HDFC Bank Limited, Reliance Industries Limited, ICICI Bank Limited, Infosys Limited, ITC Limited, Bharti Airtel Limited, Tata Consultancy Services Limited, Larsen & Toubro Limited, Suzlon Energy Limited, Axis Bank Limited. So the highest weightage of 4.58% is given to the HDFC Bank Limited because it is in the top first position. The top 10 position is given to the Axis Bank Limited by a weightage of 1.22%. So now as we have a look at the sector and top 10 holdings under this index, now let's move on to understanding the index returns as on September 30, 2024 from the data we have gathered. As you can see from the tabular column, the graph it represents that in 1 year, it has produced a return of 43.54% and in 5 years it has produced a return of 25.53% and since inception it has produced a return of 17.09%. And from the graph as well, you can understand that in short term it might have dips here and there, but in long term, in the bigger picture, you can see it has consistently performed well in the long term time horizon. So this might be more suited for investors who are looking for a long term investments. Now, as we have a basic understanding about this fund as well as the index it is representing, now let us move on to analyzing whether investing in this will be suitable to our investment portfolio or not by analyzing the pros and cons of investing in this fund. So let's start with the pros. So there are 4 key advantages of investing in this fund. Number 1, the balanced exposure to large and mid cap stocks. So this fund tracks the Nifty Large Mid Cap 250 index, which gives you a blend of large cap and mid cap stocks. So you get the stability and established presence of large caps along with the growth potential of mid caps, which provides a balanced approach. Second, diversified across 250 stocks. So, with 250 stocks in its portfolio, the fund is highly diversified, reducing the impact of poor performance by any single stock. So, this ensures a wider coverage of the market and spreads out the risk. Number 3, growth potential. So, mid cap stocks typically have higher growth potential compared to large cap. So, this fund offers a better return potential than a purely large cap fund while still maintaining some level of stability. Number 4 is a low cost investment, because as an index fund you can see it follows a passive strategy leading to lower expense ratio. So you benefit from keeping costs down while still tapping into both large and mid cap segments in the market. So these are some of the key advantages of this fund. Now let's move on to understanding the key disadvantages of this fund. So there are 4 potential drawbacks in this fund, which are: number 1, higher volatility. So with the inclusion of mid cap stocks, the fund can be more volatile compared to pure large cap fund. So mid caps are more sensitive to market fluctuation, which could lead to sharper ups and downs. Number 2, less aggressive than small cap fund. While mid caps offer growth, the fund is less aggressive compared to small cap funds. So if you're seeking maximum growth potential, this might not be the best option. Number 3, passive strategy, which limits flexibility. So being an index fund, it follows a passive investment strategy, which means there is no active management to capitalize on the short term financial opportunities from the market or protect against the market downturn. Number 4 finally is the sectoral concentration. So like many index funds, the Mirae Asset Nifty Large Midcap 250 Index Fund also faces sectoral concentration risk. So if certain sectors like financials or IT dominate the index, potentially leading to higher exposure, which leads to sector specific risk. So these are also some potential risks you might be undertaking while choosing to invest in this fund. So you have to carefully consider all these factors before deciding to invest in this. As we have a basic understanding of this fund as well as the index, and also we have analyzed this fund based on its pros and cons, let us now understand what is the final takeaway from our analysis. Is it worth investing? Is investing in the Mirae Asset Nifty Large Mid Cap 250 Index Fund worth it or not? As you can see from our analysis, it is ideal for those who want a balanced mix of growth and stability in the investment portfolio with exposure to both large and mid cap stock. However, keep in mind the higher volatility comes from mid cap stocks and the lack of flexibility due to its passive approach, which can be a potential drawback as well. So you need to consider whether investing in this will be suitable to your unique financial situation, your goals, your risk tolerance. So it's basically up to you as an investor to choose whether investing in this will be worth it or not. But our personal opinion is that this index fund might be suitable for an ultra conservative investor who's not at all willing to invest in an actively managed fund, because compared to index fund, actively managed fund has higher level of risk. But if you do want to invest in an index fund like this, then there are similar index funds out there in the market that has a lower expense ratio and a lower tracking error compared to this fund, which you can choose compared to this. And also, if you're an aggressive investor and you're willing to invest for a long term horizon, then you can choose actively managed fund, because even if they do have higher level of risk, they do have the better potential to deliver higher returns as well compared to an index fund. And if you specifically want your investments to outperform the market, then index fund might not be suitable, because good or bad, it will only try to replicate the index returns itself. They do not have dynamic fund allocation, and you do not have investments where it can outperform the index. It will only try to replicate the index. So if you want your investment to outperform the market, actively managed fund might be a better fit. And also, before investing in any fund, if you do not have the time to research about it or you do not have the knowledge about it, it's better if you seek professional guidance. So if you consult with a certified financial planner, they will be able to look at the suitability of the investment objective, risk profile, overlap ratio, and allocation you need to give to the fund, and see whether all these factors align with your unique financial situation, your investment portfolio, and help you achieve your financial goals or not. And they will take all these factors into consideration to customize the perfect financial plan and investment strategy to help you achieve your financial goals in a more faster and smarter way. So definitely consulting with a certified financial planner and seeking their professional guidance will help you in the long run. So you can definitely invest through professional guidance as well. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.